As of today, Sunday, April 19th, 2026, the stock market is currently closed for the weekend. The last recorded trading session for Tilray Brands, ticker symbol TLRY, concluded on Friday, April 17th, 2026 at 4 p.m. Eastern Time, with the stock finishing the day at $6.86. This represented a gain of 1.03% during the Friday session, a modest but notable push upward that came on the heels of a fairly volatile week. While the broader indices like the S&P 500 have been navigating their own specific hurdles, Tilray has been carving out a path that looks less like a pure cannabis play and more like a diversified consumer goods powerhouse. The intraday movement on Friday saw the stock open at $6.97 and hit a high of $7.17 before settling back down, reflecting a tug-of-war between those looking to capture quick gains and institutional players quietly building or adjusting their positions in the background. While most people look at Tilray and see a stock that lives and dies by the latest headlines regarding federal legalization in the United States, the real story right now is actually hidden in their balance sheet and their aggressive expansion into the European medical market. Most retail investors are waiting for a single legislative moonshot, but the smart money is watching how Tilray is systematically replacing high-risk cannabis revenue with stable, high-margin craft beverage and pharmaceutical distribution income. On April 15th, just a few days ago, the company announced the acquisition of the Lyphe Group in the UK, a move that establishes a vertically integrated medical platform, combining clinics, digital pharmacies, and production. This is the reality that is starting to exceed the market's stale expectations. People expect a struggling weed company. What they are getting is a global healthcare and lifestyle conglomerate that is using the current sector weakness to swallow up competitors at a discount. The general belief about Tilray is that it is a lottery ticket stock, something you buy on a site like Robinhood and hope for a sudden 50% spike when a politician mentions rescheduling. But if you challenge that view, you see a much more complex picture. Since their record Q3 fiscal 2026 results were reported on April 1st, we've seen net revenue climb to over $207 million, driven by a massive 73% growth in international cannabis. This isn't just about the US anymore. Tilray is now the #1 cannabis company in Canada by revenue, but they are also becoming a dominant force in Germany and the UK. When you look at the recent trading volumes, which have stayed relatively consistent around 3.5 million shares daily, you can see that the panic selling of previous years has largely exhausted itself. We are seeing a stabilization phase where the floor is being set by actual business fundamentals rather than just speculative hype. The recent stock movement has been a fascinating study in institutional activity versus retail sentiment. While some smaller investors might be getting impatient, we've seen major players like Tudor Investment Corp opening new positions recently. This suggests that the professional side of the market is starting to value Tilray's all-weather model. If you're looking for investment help or exploring different investing sites, it's worth noting that Tilray is no longer just a weed stock. They've integrated 8 craft brands from Anheuser-Busch and are targeting the distribution of over 15 million cases of beverage alcohol by the end of this year. This provides a massive buffer. Even if the cannabis regulatory environment remains stagnant, their beverage and wellness divisions are now large enough to carry the weight. This diversification is why we're seeing a divergence between Tilray and some of its pure-play competitors, who don't have that secondary safety net. Let's talk about the macroeconomic pressures for a second. With oil prices flirting with $100 a barrel and broader inflationary concerns still lingering, the cost of distribution is a real factor. However, Tilray's pharmaceutical distribution arm, Tilray Pharma, just hit record quarterly revenue of $83 million. That is an incredible amount of cash flow that is largely insulated from the whims of the cannabis market. For anyone using an individual brokerage or managing a self-investing strategy, this is the kind of detail that matters. The market narrative says Tilray is risky, but the data shows they are building a fortress of diverse revenue streams. Their gross margin in the cannabis segment actually sits at a healthy 40%, which is better than many traditional consumer packaged goods companies. If you look at the technicals, the stock has been trading under its 200-day moving average for a while, which usually signals a bearish trend. But look closer at the volume spikes during the dips. Every time the stock gets pushed down toward the $6 level, we see a surge in buying. This indicates a strong institutional floor. People are using platforms like Interactive Brokers and Fidelity to accumulate shares while the price is suppressed. They aren't looking for a quick trade. They are looking at the long-term consolidation of the industry. Tilray is the hunter in this environment, not the prey. They recently filed a $180 million at-the-market equity program, and while some fear dilution, the reality is that they are war-chesting. They are preparing for a major move in the US the second the regulatory doors crack open even an inch. Comment below how many shares of Tilray Brands you currently hold, or if you're waiting for a specific price point to enter. I'm curious to see if you're focusing on the cannabis side or if the craft beer expansion is what caught your eye. To understand where Tilray is going, you have to look at what they actually do today versus 5 years ago. They started as a medical cannabis pioneer in 2013, but the 2021 merger with Aphria changed the DNA of the company. It stopped being about growing plants and started being about brand management. Today, they operate in over 20 countries with a portfolio of more than 40 brands. This business model is built on cross-category synergies. They use the same distribution networks for their hemp-based foods, their craft beverages, and their medical products. This is why their general and administrative expenses are starting to scale more efficiently. They aren't reinventing the wheel with every new product. They are just plugging new brands into an existing, massive global machine. The older reports often focused on the net losses, which were admittedly eye-watering in the past. But in the most recent quarter, that net loss improved by a staggering 97% year over year. They are on the verge of consistent profitability, and the market is still pricing them like they're burning through cash at the old rates. This is the gap between expectation and reality. The expectation is a company that can't find its footing. The reality is a management team that has successfully integrated multiple massive acquisitions and is now trimming the fat. They've reduced their outstanding debt by millions just in the last quarter alone. Their balance sheet is showing $264 million in cash and marketable securities, giving them the flexibility to be aggressive, while their competitors are struggling just to keep the lights on. Looking toward the future, the catalysts are lining up in a way that the market hasn't fully priced in. Everyone is obsessed with the US Department of Justice and the rescheduling of cannabis to Schedule III. Yes, that would be huge because it would eliminate the 280E tax burden, which currently prevents cannabis companies from deducting normal business expenses. That alone could add millions to Tilray's bottom line overnight. But even without that, the European expansion is a massive untapped opportunity. Germany's recent move toward partial legalization and the expansion of their medical program is a direct tailwind for Tilray, because they already have one of the few high-capacity production facilities in the country. They are already there while others are still trying to figure out how to get a license. The risks are still present, of course. Regulatory delays are the biggest hurdle. If the US continues to drag its feet, Tilray will have to rely on its beverage and wellness segments to drive growth. There is also the risk of further dilution if they decide to use that $180 million ATM program to fund more acquisitions. However, the opportunity lies in the fact that Tilray is positioned as the primary roll-up play in the industry. As smaller, less capitalized companies fail, Tilray will be there to pick up the best brands and the best intellectual property for pennies on the dollar. This is a consolidation play, and in the history of the stock market, the companies that lead the consolidation of a new industry usually end up as the dominant blue chips of the next decade. If you're using SoFi Invest or checking your Fidelity mobile app, you'll see that Tilray's volatility can be stomach-churning, but that volatility is the price of admission for an industry that is still in its infancy. The contrast between the public perception of Tilray as a meme stock and the reality of its $2 billion market cap and $800 million plus annual revenue is where the value is found. It's a company that has matured much faster than the laws that govern it. While the rest of the world waits for the law to change, Tilray is changing the nature of its business, so it won't matter quite as much when the law finally catches up. In summary, the central insight here is that Tilray has moved beyond being a speculative cannabis ticker. By diversifying into craft beer, wellness, and international pharmaceutical distribution, they have built a business that can survive a no-go scenario in the US while remaining perfectly positioned to thrive in a yes scenario. The expectations are low because the cannabis sector has been beaten down for years, but the reality is a company with record revenues, improving margins, and a global footprint brand that isn't impossible for a newcomer to replicate. Whether you're doing online investing through Schwab Intelligent Portfolios or trading actively on the Robinhood app, Tilray represents a unique hybrid of a recovery play and a long-term growth story. The authority of their leadership in Canada and their strategic beachhead in Europe makes them a formidable player. The gap between what people think Tilray is and what it has actually become is where the potential lies for the patient investor. It's no longer just a bet on a plant, it's a bet on a global distribution machine that is just getting started. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.